Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Our most read story on the Bloomberg at this hour has to do with the Trump administration telling Harvard University it cannot enroll international students. So no doubt about it, delivering a major blow to the school after the government, you might recall, also had frozen billions of dollars of federal funding and really escalating a fight that we are seeing between the United States and Harvard and other elite colleges, but really kind of taking this to a whole other level, Tim.
We got Kasia Klimashinska, team leader for DC Breaking News, joining us from our Washington, D.C. bureau. Carol read the headlines, Kasia, but I'm wondering about sort of, we're seeing the reaction, we're seeing the interest. Everybody's talking about this story right now. Is this the type of thing that is going to get legal pushback? Are lawyers already working on this to try to prevent this from happening? Or can the administration actually make Harvard do this?
Yeah, great questions. Thank you for having me. Indeed, this is currently the most read story on the terminal, and really a surprising new development, a major escalation where the Trump administration is basically telling Harvard they cannot enroll international students. Not only that, but also the currently enrolled foreign students have to transfer or they will lose their legal status. Harvard has already responded saying that they will fight it, that they obviously don't agree with this decision. So there will be definitely more to come.
You know, what's interesting, Kasia, like we've been seeing all of this play out, and I feel like universities have been trying to figure out what's the right balance in terms of dealing with the administration over it. I feel like money trumps everything, and financially we are continuing to see impacts on universities because of what the administration is doing, pulling federal funding. But I look at Harvard, I mean, we keep reading the statistic, almost 6,800 students at Harvard, 27% of the entire student body come from other countries. That's up from just under 20% back in 2006. This is looking at the university's data. I mean, this becomes a bigger and bigger financial blow to the university. And you do wonder at this point, do universities in general, Harvard included, are going to fight back even harder, because this is about money it comes down to, also in terms of principals.
Yeah, exactly. So this is more than a quarter of all their students. I think it's also interesting that this is the Department of Homeland Security getting involved. The statement earlier this hour came from the DHS, which was citing the protests, the fact that they blame the Harvard leadership for not being able to keep its campus basically safe and putting some students at risk.
Yeah, I'm thinking about all the Harvard alumni in Congress right now. Harvard Law actually has an article on their website post-election touting the fact that all Harvard Law alumni running for re-election to Congress won their races, while 5 more alumni vied to join their ranks. They talked about incumbents in the U.S. House of Representatives. They also talked about Republican Ted Cruz, Tim Kaine, who were re-elected to the Senate, in addition to other alumni from Harvard Law School. Have we heard anything yet at this point from either Democrats or Republicans who were alums of Harvard University? Elise Stefanik, for example, who's been very critical of the school, Republican member from New York of the House. Have we heard anything from them since this came out?
It came out less than an hour ago, so I haven't seen anything here yet on the breaking news desk. You might. It's not only people in Congress; it's also major donors, right, on both sides. So I'm sure this story will continue to escalate.
Talk a little bit more about this coming from the Department of Homeland Security. Like, it's just interesting. It's kind of playing into kind of the safety element, right? We've seen this kind of being used, I feel like, in terms of security reasons. We've seen this with immigration in general. That thinking and philosophy that continues to come from the administration, again, that I guess will also be discussed in any kind of legal arguments.
Yes, this timing is really interesting and really strange, given what happened here in D.C. overnight as well. And the statement actually specifically cites Jewish students. It's also kind of weird that the statement landed just after Caroline Leavitt finished her briefing, so that kind of didn't allow us to ask her more questions, even though obviously she must have been aware of it happening, because apparently there were some papers going back and forth between the Trump administration and the school for several days or even weeks now. So yes, this is definitely an interesting timing for this announcement.
You know, I'm also thinking, and I know you're covering breaking news, but I'm also thinking about just the educational impact of a move such as this, given the numbers that Carol mentioned, thousands of students there, close to 30% of the entire student body. This is the type of thing that could potentially wreak havoc on a university's finances, but also in such a short period of time where ostensibly acceptance letters have already been mailed out. We understand the yield of the class coming in. The timing of this is pretty wild.
Yes, it's really strange and difficult. It's not only about the new students, but also existing students who will have to transfer or, lose their legal status. So that means losing their visa, possibly being forced to go back home. Yes, and it's not only about the finances, right, but also about the diversity of the campus. I mean, we know that the school has been previously attacked for their diversity efforts. So this also addresses that issue of the diversity of the student body.
Kasia, one last question. It's interesting that it feels like Harvard is being attacked big time. We've seen it also with Columbia and some other schools, but it does feel like, makes me wonder, like, who didn't get into Harvard and the administration that's like so angry? But I know it's a bigger, broader story. Having said that, should we assume that other schools will be targeted in a similar way as Harvard is being?
So I think this is what is very surprising about this news, right? That it singles out this one school and goes after its leadership. So I think we have to see. We have yet to find out whether the DHS will go after other schools as well.
Yeah, fascinating and disturbing. I think it's safe to say many would characterize it that way. Kasia Klimczynska, she's team leader for DC Breaking News, joining us from our DC News Bureau.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, let's talk a little bit about today's Big Take, Carol Massar. I couldn't get enough of this. And the illustrations that are included in it. Max Abelson joins us now. He's Bloomberg News finance reporter. Whether it's geopolitics, trades, tariffs, or on more personal level, real estate, crypto, corporate ventures, some say this second term of President Donald Trump is all about the art of the deal. Some of the actions, though, have raised ethical questions that have been addressed by White House Press Secretary Caroline Leavitt, including earlier this month.
The president is abiding by all conflict of interest laws. The president has been incredibly transparent with his own personal financial obligations throughout the years. The president is a successful businessman, and I think, frankly, it's one of the many reasons that people reelected him back to this office. Look, I can assure you the president acts with only the interests of the American public in mind, putting our country first and doing what's best for our country, full stop. That's his intention, and that's what he's focused on.
Well, today, the Bloomberg Big Take is focused on how, since the early days of the re-election campaign, President Trump has more than doubled his net worth, Carol, to about $5.4 billion. All
right, we want to get into this. And with us, who has written this Bloomberg Big Take. It is one of the most read, and it is a must-read. It has been deemed so by our Bloomberg editorial team. Max Abelson and Annie Massa wrote the story. And joining us right now is Bloomberg News finance reporter Max Abelson right here in studio. It's pretty incredible because you guys have really laid out all that's been going on in terms of business activity for the president. We should just, we just heard from Caroline Leavitt, who has been asked about this at some of the press conferences, the daily White House press conferences. And she says the president abiding by all conflict of interest of laws, incredibly transparent, and so on and so forth. But it does beg a lot of questions. Tell us about how you approach this, because there's been a lot of stuff going on.
I would love to. I'm going to say something about our project, and I'm going to say something like that's basically the opposite of it. But you'll see what I mean. Our project is really about being able to step back and to say in concrete terms, factual terms, clear terms, what is happening here when a president is doing more than anyone in modern American history that we can tell, any other president in modern America, to position his family to make an astounding amount of money while in the White House. And when I say astounding, what we're talking about is not in the millions or in the hundreds of millions. What we're talking about is deals that are in the billions, whether we're talking about the Trump name powering, I think, more than $10 billion worth of real estate projects, the Trump name powering billions of dollars of value for a social media company, which only went public last year.
Right.
Hundreds of millions of dollars of crypto. And then I told you I was going to say something that was the opposite of this. This is what I want to say. As I was walking here from my desk in the newsroom, just on the other side of this floor to our radio studio, I saw that the United States government, the Trump administration, told Harvard University that it can't enroll international students, and that existing foreign students are going to have to transfer or lose their legal status. And for me personally, news like that, which I find comes basically every week, maybe sometimes every day, just these really things that I had never contemplated or never heard of, that there has been so much tumult in the last few months, so many things going on, tariffs alone, the stock market alone, the economy alone, that it is so easy to forget that what is happening on the Trump business side is really important too. So what Annie and I were trying to do, we're to try to just forget about politics and forget about policy, forget about things like Harvard, and just really focus on the Trump money-making machine.
Can I say there are folks that come in and say, we're all kind of chasing the stuff that is coming out of the White House, and the question often arises of like, well, wait, what are we missing? What is going on that maybe isn't in the headline or what the administration is talking about or the president and his team? So take it away, because you guys did some really deep reporting.
That is what we tried to do. So Annie Massa and I, with help from many editors, I want to mention David Shear, who really made this happen. What we tried to focus on is that compared to all that tumult that I just mentioned, all the Harvard news and the comings and goings, compared to that, there's something very clear about the Trump empire, which is that its approach and our timeline is since the re-election campaign began. Everything that we're talking about here is after he announced his re-election. The approach is clear. The Trumps are selling that family name, and they're doing it at a scale that I really do think could very well be the story of the day, the story of the year, if it weren't for all these things happening. We see the Trumps going and doing things they simply did not do in the last term, when they said no new foreign deals in the first administration. We were not talking about new foreign deals in the last administration, really, because Trump essentially said that they wouldn't happen. Now, you basically have to take out your globe, because Annie and I traveled, journalistically speaking, to Qatar, India, Vietnam, the United Arab Emirates. The United States is involved too. And at each point, they're doing really interesting things. They're licensing their name to really big projects, hundreds of millions of dollars, if not billions of dollars worth of projects. And sometimes, not all the time, but sometimes something very important is happening, which is that the deal includes arms of governments. I'm talking about, it may not be the Trump administration, it may not be the Trump family, I should say, signing a deal with a government, but governments are involved. And that rubs up against what Trump said would not happen this term, when Trump said there would not be new deals with foreign governments.
Governments involved, government money involved.
What we're really talking about is things like, let's say in Oman, for example. They announced when they announced that deal, they announced as a partner the Omron Group, and that is essentially think of it as a state-owned tourism group, and they're going to be involved in that deal. Listen, let me point out that the Vietnamese, I believe he's the prime minister, he may be the president, but the one extremely important figure in Vietnam, met with basically the financial representative on the new Trump project in Vietnam. That is what we mean when we say that these things are very big, they're potentially very lucrative, and a lot are happening right now.
Max, real estate is just one piece of the puzzle here. It's certainly a global piece of the puzzle. The crypto story is included in here as well. You talk about World Liberty Financial, the Trump and Melania meme coins as well. I want to focus a little bit on the corporate side of things.
Yes.
I think that gets a lot less attention than everything else.
Right on.
There was a lot in here that I had never even heard of when it came to Trump family connections. Grab a gun, for example. Talk a little bit about the corporate connections and what you, Annie, and the team uncovered here.
I really admire Annie Massa's ability to put her finger on these corporate connections, that things that I hadn't heard of. I mean, I think it's actually helpful to put crypto off to the side, because it gets so much attention. I mean, literally tonight, Trump is scheduled to meet with the top holders of one of his crypto projects. I think it's the meme coin. But then, so that gets all the attention. But then you see something like 1789 Capital. Donald Trump Jr. joined, I think he became a partner at 1789, like a matter of days after the election. I think it was less than a week after the election. And that's a group that, Rebecca Mercer, if you remember the Mercer name, that is a really important Republican mega donor. And what they're basically doing, the way to think about it, is they're essentially monetizing the kind of Trumpian vision for U.S. culture by taking stakes in, things like the enhanced games. I don't know if you've heard of that. Basically, it's been nicknamed the Steroid Olympics.
Yeah, I've heard of these. You can athletes who can they're not drug tested. You can do whatever you want, and then
that's right. That's my interpretation. Listeners can't really see me right now, but I'm like extremely jacked and steroidal. I'm an enormous person.
Planning to.
That's exactly. I'm going to fight in the Steroid Olympics. That's right. But the list goes on and on. It's almost too much to mention on just one interview. I want to give a shout out to Unusual Machines, which is essentially a drone component maker. This is how powerful the Trump name is. When Donald Trump Jr.'s role was announced in November 2024, right again on the money, the stock popped. Basically 250%, maybe just shy of 250% in like the 2 trading days that followed. That is power. I tell people that my beat here is money and power. That is money and power. And it keeps going. Have you ever heard of PSQ Holdings? Do you know Public Square?
Now I have.
Yeah.
This is the anti-woke. Yep. This is the anti-woke marketplace where you can go and buy items such as these pro-life diapers that you guys highlight in the piece.
Yep. I want to thank Michael Seifert, the CEO, who gave us a comment. He said that Trump Jr. is an incredible businessman, strategic partner, and marketing expert. And in other words, what he's saying is that we want Trump Jr. for his mind, not necessarily for anything else. But that's a good example of $3 million more. That was Trump Jr.'s 2024 compensation we found for PSQ. And his board role was announced once again, December of 2024. It keeps on going. There's Dominari, which listeners should read Annie Mass's separate story on Dominari.
We talked with Annie about it.
Super fascinating.
Yeah.
Have do you know the idea of basically events contracts?
Yeah, we interviewed the Kalshi founders when they launched years ago.
Kalshi, that role was announced January, and that's Donald Trump Jr. again. Eric Trump. I don't want to overshadow Eric Trump. Eric Trump is also involved in some of these stuff. But when you're talking about grab a gun, for example, that's yet again Donald Trump Jr. It's yet again. It's essentially the last few weeks. Yeah. It's yet again at least $3 million, and it's. For listeners who I think that I'm especially interested in talking to listeners who sort of their minds aren't made up. I don't think there's much to do as a journalist for readers and listeners who just know that they despise Donald Trump or that they know that they adore Donald Trump. I'm interested not in pandering to this someone who has their mind made up already. I'm really interested in just focusing on the numbers and focusing on just what's actually happening. And whether or not you dislike this or admire it, I think it's really helpful to take a step back and to look at a family empire that is poised to make money while the father is in the White House in a way that's, I don't know what to compare it to. Obviously the Biden family, the Obama family, the Clinton family, the Bushes, I can add. All of these people are capitalists. All of these families, we're familiar with the reporting around their money making for sure. But as a financial reporter, I've never seen, I think the key word here is the scale. Billions of dollars just for Trump Media and Technology Group, which you know of because it's the True Social parent.
Correct.
That went public last year. He was on the campaign trail. The scale is what appeals to me as a finance reporter because it feels so new.
Listen, to be fair, right? Like you say, other presidents and their families make money, whether it's they write books, they are consultants. There's a lot of things.
Speeches.
And just by being associated with a family that was in the White House, right? It definitely opens doors. But the point is, I think also, is so much of this is happening before going into the White House and now that he's in the White House.
That's a really good way of saying it. One of my favorite early scoops, I think it was in the first 5 years that I was at Bloomberg, was about Barack Obama getting paid I believe my memory is hundreds of thousands of dollars, maybe 300,000, maybe 400,000, maybe it was less, for speeches at finance firms, including Cantor Fitzgerald, which is ironic. Cantor Fitzgerald is just across the street from us here in our Bloomberg headquarters.
Yeah. Cantor
Fitzgerald, of course, the family that's in control is the Lutnick family. Howard Lutnick, of course, is our Commerce Secretary now. And I bring that up. It's relatively random and relatively stale, but I bring that up first of all, because it goes to show that the Obamas, just like many other political figures, are interested in money making. But I just want to bring up the difference in scale. That as far as my reporting showed, that was a guy making a few $100,000. I know that his book deal, he made, what was that, like $60 million?
I think he made a lot, yeah.
but what I really tried to wrap my mind around, and I know Annie felt this way too, is that what we're talking about now for the family since the re-election campaign began, is in the billions.
Max Abelson, this is a great story. It's today's Big Take. It's one of the most read stories on the Bloomberg terminal. You got to read it online, because the illustrations in there are perfect as well. Max, thanks so much for joining us.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
There's a lot that is once again coming out of D.C. We have actually seen shares of Fannie Mae and Freddie Mac surge to 16-year highs after President Trump said late last night that he was giving very serious consideration to bringing the firms public after more than a decade of being under government oversight. So let's get to what you need to know. Bloomberg Intelligence consumer finance analyst Ben Elliott is with us once again from our D.C. bureau. Back to our D.C. bureau we go. Hey, Ben, good to have you here. First up, Fannie Freddie, been around for a long time, storied history, quasi-government, publicly traded entities. What do we first need to know kind of about that history?
Yeah, so they were founded many decades ago. Fannie Mae first in the 30s, Freddie Mac later in the 70s. Actually, they were privatized in the past, in the late 60s, by a previous piece of legislation, which sort of has some echoes of what's happening today. And the companies basically guarantee 70% of U.S. mortgages. Their existence is unique globally, and it makes the U.S. home ownership model possible. And it's the reason that we have a 30-year fixed rate mortgage available to homeowners today.
So what do we need to know about what happened potentially during the financial crisis and the government oversight that we've seen over the last few years, and what could change given what we heard from the president?
Yeah, so the companies are fundamentally changed since the financial crisis. It's important to note that they were doing all kinds of ancillary businesses. They were basically operating the world's biggest hedge fund, as Warren Buffett once said. And they got over their skis, taking on a bunch of additional risk beyond just guaranteeing vanilla mortgages. So the majority of the losses they suffered from 2008 to 2011 were from those activities, right? So they don't do any of that anymore. But they exist in this sort of quasi-governmental state where the FHFA and the Treasury own and are in charge of the companies. And by and large, they function very well. They provide a huge amount of liquidity to U.S. housing markets every year. They make the 30-year mortgage possible. And they earn about $30 billion a year for the Treasury Department. So the status quo is arguably working, but they're in sort of a bankruptcy-like process that was never meant to be permanent. And so there are a lot of observers who think that process should now come to an end.
All right, so you've got Fannie Mae up 40% in today's session. Freddie Mac is up just about 39%. So if they do go public officially and they're publicly held entities, what does it mean for them? What does it mean for their role in housing? How might that change things from what they've been?
Well, it's really important to note that there are very few details on this, right? So the president has been sort of saying what he said last night since 2017. So we don't have anything new, and the really important detail will be how, if at all, the U.S. government continues to back these companies after they exit conservatorship potentially and start to trade like normal public companies. And everyone, by and large, agrees that there will be some form of federal government guarantee. They hope it will be explicit. They hope it will be defined at a certain value, and they hope that it will be paid for. But by and large, the companies get a huge amount of benefits from being quasi-governmental. Their credit rating is tied to the sovereign, for instance. So they get very they get financing on par with the risk-free rate, essentially, which allows their business model to function at the prices it does today. So if the companies were to exit conservatorship, it's not necessarily true that mortgage rates will rise, but there are plenty of ways in which they could. One is that the companies choose to or need to earn more profits to attract third-party private capital to replace the government's current stake. And the other way is that agency MBS investors lose faith in their backing. And they start to see credit risk returning to the securities, and therefore they demand a larger premium over treasuries, and that translates into higher mortgage rates.
What does it mean exactly when you say that the U.S. has a stake in these companies? Because, I go to HDS on the Bloomberg terminal to look at these equities to see who the holders are. It doesn't say the U.S. government owns X percentage of these firms.
Yes, actually at Bloomberg we do an interesting thing, which is that we display the share count as though the Treasury had already executed its warrants. It holds warrants to buy 79.9% of the common stock, but they're not actually exercised yet. So the federal government is not reflected as an owner of the common shares. What they do own is something called the senior preferred shares, which obviously, as the name implies, are senior to the common shares. And the valuation there is something called the liquidation preference, which is growing each quarter equal to the amount that the companies earn, and it's approaching $400 billion. So that's kind of the biggest impediment to this recap and release process that you hear about, is what does the federal government do with this gigantic stake in the companies, and how does it get paid back?
Yeah, because I wonder, if the government is still somehow involved, is it kind of a sure thing for investors? Maybe not a high flyer, but a sure thing. And I also do think about moral hazard. If something goes astray, do we just assume the government's going to be there to protect things?
Yeah, I think there's the biggest risk is obviously moral hazard, right?
Right.
If they leave conservatorship and there's a defined dollar amount that the Treasury agrees to backstop the companies, and they pay for it, I think even then bond markets will assume that if worst comes to worst, the federal government is going to write a blank check. The companies are absolutely fundamental to the U.S. economy, and if they were private enterprises, there's just no way that they could, go into bankruptcy and be resolved simply. And the evidence of that is 2008, right? It's staring us right in the face. So it does seem as though there's some circular logic here,
right.
We'd be going right back to where we were.
Ben, 15 seconds. How important is Fannie and Freddie in terms of the housing market, the liquidity, just very quickly?
Absolutely crucial. They back 70% of all U.S. mortgages, and without them, the fixed rate 30-year note just wouldn't be available the way it is today.
This is what you call an interview, why you should care. Ben Elliott, thank you so much. Really appreciate it. Bloomberg Intelligence consumer finance analyst Ben Elliott.
You know who the top holding is? Pershing Square at 2%.
Love this stuff. This is Bloomberg.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car.
Hey, how about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we're just about 18 minutes away from the closing bell on this Thursday. Carol Master along with Tim Stanovic live here at our Bloomberg Interactive Broker studio. Charlie and Bill Maloney breaking down the trade, talking about the equity trade. We're pretty much hovering near our best levels of the session, but what we really want to get into is what we've been talking so much on the fixed income side of things, and in particular, U.S. Treasuries.
Sometimes you have the perfect guest for the moment.
We really have the perfect.
And this is one of those times. We've got Kathy Jones with us. She's Chief Fixed Income Strategist at the Schwab Center for Financial Research, and she's here in our Bloomberg Interactive Broker studios. Thanks for coming in. It is always great to see you, especially in a week where we're talking about over 5% on the 30-year.
Well, thanks for having me. It's a fun time to be talking about it.
So what would you say is the underlying root cause of what we saw happen yesterday?
I think there are a number of things have come together. So it didn't just happen overnight, obviously, but the initial catalyst or the immediate catalyst was the budget bill, which was kind of the final straw for the market, saying, okay, there's really no meaningful progress going to be made anytime soon on reducing the deficit. And this comes after we've seen global yields rise, after the dollar has fallen, and we've made all these policy changes on trade that actually would discourage capital inflows. And so this policy mix combined with the budget said, okay, if I'm going to hold long-term paper, I'm going to need a higher yield to compensate me.
But that bill is now closer to becoming law. And we're seeing yields actually pull back a little bit. So in my view, and correct me if I'm wrong, nothing has really shifted on that front, yet we're not seeing as much excitement, or in the words of the president, maybe yippiness in the bond market.
Yeah, well, I think a lot of the yippiness happened when we hit 5%, right? And so now we're settling down and kind of dealing with what's
so we don't stay yippy even though we're above 5%. Just the fact that we hit it is yippy.
Well, yes, but we have a one-day reprieve, so we don't know what's coming. But I would have to say that if nothing changes on the policy front, the likelihood is that yields will continue to rise at the long end, just because investors want more compensation for all the risks that have been put together here.
One thing I want to get into is, and what I'm finding interesting, is this just isn't a U.S. thing. It's a global thing. And we talked about this with our John Authors, who has a column out. He said the bond vigilantes, may need a lot of rope. And so, but getting into, he said, even some bigger things, not just governments, fiscal, houses, longevity, costs to society, and just a different way of thinking of it. And I'm just curious how that plays into your thinking as well, Kathy.
Yeah, absolutely. Demographics are important here because we do have aging populations, and that means the burden on government will be higher, presumably, than it has been in the past, as a larger proportion of the population requires government services. And we haven't done anything to kind of address that imbalance longer term. So that combined with, we've come off 20 years of slow growth, low inflation, and ramped up our spending. And now we're ramping it up more at a time when the economy is actually doing well and inflation's not low and interest rates aren't low. So we're kind of having the policy impulse, the fiscal impulse is going in the wrong direction at this stage of the business cycle. Usually it should be counter-cyclical, and this is pro-cyclical.
Are you worried about these spending programs ultimately will lead in some ways maybe to stagflation? And I'm just thinking about, if we're living in a higher rate environment, that's going to have a cost, right? Across the board, everybody, everything. And I'm just curious, as we continue to see, we're probably going to still be in a higher tariff environment. Things are going to cost more. And I know we'll settle into it, but everybody has just so much in terms of funds to play around with. So do you worry about stagflation? What do you worry about in terms of the economic scenario?
I do worry about stagflation because it's probably one of the most difficult things to get out of. And that's without a lot of pain being inflicted on someone somewhere. So policy-wise, what does the Fed do with stagflation? They probably can't lower rates, right? Because that will just send inflation higher. On the other hand, if the economy is weakening and unemployment is rising, they really should be easing policy because that's part of their dual mandate. It's not an easy process to work out of. We had it in the 70s, Arthur Burns and Nixon and all that.
We've talked about it a lot here.
And it was a long, painful process to get out of it. And so if we go back to an environment like that, and particularly if we do it globally, that is going to be a very difficult process.
Is the risk now of that greater than at any point you've seen before in the last, let's say, since the great financial crisis?
Yeah, I think it is.
On a global perspective or just for the U.S.?
Globally as well. Now we're encouraging Germany and Europe to spend more on defense. I don't know that that's going to create for Europe, this boom, this fiscal boom, but it's more than we have asked of them before, and it's more spending than they've done before. So we have that in Europe. Japan has its own unique set of problems, and you've seen those yields move up very quickly. So it could become a global phenomenon.
All right. So there's that backdrop. Keep hitting my mic. They're going to yell at me. But we have that backdrop. The other thing is nothing is as deep and liquid as the U.S. Treasury market. So how does that insulate us from some of what might come?
Yeah, I think the thing that gives me the most comfort is that there's no real replacement for the U.S. Treasury market. And the other thing is...
And not likely to be anytime soon, right?
You can't really see it on the horizon. And the other thing is we're a wealthy country with tremendous assets. So we have the capability of funding our debt, of spending, where we need to spend. We have the capability to reduce our debt and to service our debt even at higher interest rates. We don't seem to have the willingness to deal with it. That's more of the issue. But we're not like an emerging market country or poor country that builds up so much debt it can't service the debt. We have the ability to do it.
Just a minute left. I've been asking everybody this question today when it comes to fixed income. How do you see corporates competing with fixed income right now for money?
There's been a lot of interest in investment-grade corporates. I think they're a little expensive right now.
Okay.
We like them, but the spreads are pretty tight. So I'd say up in credit quality. But I think they look pretty good. Yeah,
because we spoke to Sandy Villery yesterday, who mentioned he's not interested on the fixed income side when it comes to U.S. debt. He's looking at corporates. That's what's interesting to him.
A lot of issuance in euro now from U.S. corporations.
Is that where you would look overseas? Like where would you in the fixed income commit some new money right now? Got about 40 seconds.
Yeah, we like municipal bonds look very attractive. We do like investment-grade corporates, and some of the euro-denominated issues could be very attractive, even though the yield's a bit lower, if you think the dollar's going to go down as we do.
You're someone who's seen market cycles. Does this kind of feel odd, weird? Like, how do you see it? Forgive me, just got about 25 seconds.
Yes, it feels weirder than anything, and I've been in this business for almost 40 years.
Yeah.
This feels weirder than anything that I've seen.
And that includes GFC, COVID, other...
You got it.
Yeah.
Yeah.
Thank you, which is why we really looked forward to talking with you today. As always, Kathy, thank you. Kathy Jones, she's Chief Fixed Income Strategist over at Schwab Center for Financial Research, joining us right here in our Bloomberg Interactive Broker Studio.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.